This is the site of the Abuja International Airport. Scrubgrass, red dirt, silence. A Brazilian bank paid $242 million to build it. There is no terminal, no runway, no blueprint. There never was. In 1995, a wire transfer left Sao Paulo, Brazil. $40 million. Destination, Lagos, Nigeria. Stated purpose, airport construction. The man who sold it wasn't the governor of Nigeria's central bank. He was a former bank director named Emmanuel Nwude, a financial insider who knew exactly how central banking language sounded, who knew the protocols, the letterheads, the tone. And the man who bought it, the senior bank director who authorized every single payment, he knew too. This is the story of the largest advance fee fraud in history, and the system that processed it like an expense report. 1995, Sao Paulo, Brazil. The phone rings at Banco Noroeste. Banco Noroeste was not a global giant. It was a mid-tier Brazilian bank. Regional branches, local depositors, families, retirees, small business owners with checking accounts and modest savings. The kind of bank where the tellers knew your name. The caller identified himself as Paul Ogwuma, governor of the Central Bank of Nigeria. In Nigeria, that title carries the weight of a finance minister. The governor controls monetary policy. He sets interest rates. He oversees every bank in the country. His proposition was simple. Nigeria was building a major international airport in its capital city, Abuja. Abuja was booming, one of the fastest growing cities in West Africa, with genuine infrastructure needs and a government eager to modernize. The airport was real, in the way that only the best lies are real. It was plausible, it was needed, it was overdue, and Banco Noroeste was being offered a privileged position in the financing. The man who took that call was Nelson Sakaguchi, a senior director at the bank, decades of experience. A serious man with a serious title at a serious institution. When the governor of a nation's central bank calls, you listen, you take notes, you convene meetings, you authorize payments. But the voice on the phone did not belong to Paul Ogwuma. It belonged to Emmanuel Nwude, a former director at Union Bank of Nigeria, one of the country's largest financial institutions. Nwude wasn't some faceless email scammer working from a cyber cafe. He'd sat in boardrooms. He'd signed loan documents. He knew the vocabulary of central banking because he'd spoken it for years. He knew which words made bankers lean forward. He knew which numbers made them stop asking questions. The first wire transfer was authorized. $40 million left Brazil. $40 million was now in Emmanuel Nwude's account. But this wasn't a one-time theft. It was the first installment. Over the next 3 years, 21 more transfers would follow, each one authorized by the same man, with the same signature, on the same letterhead. And not once did anyone at Banco Noroeste raise an alarm. Between 1995 and 1998, Emmanuel Nwude extracted approximately $242 million from Banco Noroeste. Not in one transfer, not in two, in a series of payments that stretched across 3 years, each one requiring authorization, each one passing through compliance systems, each one approved, processed, and sent. The mechanics of this con were extraordinary. Nwude created an entire paper reality. Fake government contracts with official seals, fabricated construction timelines showing foundation work, terminal design, runway grading, progress reports documenting delays, cost overruns, material shortages, all the predictable headaches of a massive infrastructure project. Each document sophisticated enough to satisfy banking due diligence, because Nwude understood something fundamental. The best lie isn't the one that sounds too good to be true. The best lie is the one that sounds like work. Problems, delays, cost overruns, the mundane texture of a real project. He didn't operate alone. Accomplices played the roles of government officials, lawyers, project managers, fixers. When Banco Noroeste needed a conference call with the Ministry of Aviation, Nwude provided one. When they needed site inspection reports, he delivered binders full of them. This was a production. Choreographed, multi-character, sustained across years. And the money, $242 million. Consider what that number meant in the mid-1990s. Adjusted for inflation, it exceeds $350 million in today's dollars. That's more than many countries spend on infrastructure in a decade. That's not a scam. That's an economy. But here's what made the number lethal. Banco Noroeste was not JP Morgan. It was not HSBC. It was a regional Brazilian bank. $242 million wasn't a wound. It was an amputation. The money was being drained from the institution's foundations, transfer by transfer, signature by signature, and nobody caught it. Not the compliance department, not the board, not the auditors. For 3 years, $242 million walked out the front door, and no one at Banco Noroeste said a word. The fraud was only discovered when another bank tried to buy them. In 1998, Banco Excel Económico moved to acquire Banco Noroeste. Standard procedure, due diligence, the financial equivalent of a home inspection. You open the books, check the accounts, make sure the foundation is solid. The auditors found a $242 million hole, a crater in the balance sheet that the bank's own leadership had never flagged. The rot had been there for 3 years, invisible or hidden. When the auditors found the hole, they assumed they were looking at the work of a masterful con artist and an unlucky bank. A clean crime with a clear victim. They'd soon discover the crime was clean, but the victim wasn't. Before the investigators arrived, before the courtrooms and the lawyers and the headlines, there were the depositors. A retiree in Sao Paulo who'd kept his savings at Banco Noroeste for 19 years. He'd walked into the same branch every month. He knew the tellers by name. His pension went in, his rent came out. It was ordinary. It was safe. It was a bank. Then Banco Noroeste was gone, absorbed into Banco Excel Económico, later merged into Bradesco, the name erased, the branches closed or rebranded, and the retirees' savings, along with thousands of others, were caught in the wreckage of a $250 million fraud they never knew existed. They didn't invest in a fake airport. They didn't sign contracts with Nigeria. They deposited paychecks. They trusted a bank, and the bank was hollowed out from the inside. The investigation moved fast once the hole was found. Brazilian authorities began tracing wire transfers. The money trail led to Lagos, to accounts controlled by Nwude and his associates, to shell companies and intermediaries across multiple countries. And then the investigators turned to Nelson Sakaguchi. He was cooperative, remarkably cooperative. He sat for interviews. He provided documents. He explained in careful detail how the governor of the Central Bank of Nigeria had contacted him, how the documentation had been convincing, how the project had seemed legitimate. He described himself as a victim, a seasoned banker who'd been outmaneuvered by a sophisticated criminal. His story held. His reputation helped. 20 years at the bank, a serious man with a serious title. Investigators treated him as their star witness, a valuable asset in building the case against Nwude. Meanwhile, in Lagos, Nwude wasn't hiding. He was living lavishly, openly. It was disabled from the inside. Sakaguchi was the compliance system. He was the senior director who approved the transfers. The fox wasn't in the henhouse. The fox was the lock on the door. The 3 years of silence, 21 transfers, same signature, same letterhead, not a single alarm raised. That wasn't incompetence, it was cooperation. Sakaguchi didn't fail to notice $250 million disappearing. He watched it go. He helped it go. He profited every time it went. And the hook told you, 15 seconds into this video, the man who bought it, he knew. You heard it. You filed it away as a teaser. But it was the whole story. Think about the retiree in Sao Paulo, 19 years at the same branch. Sakaguchi knew there were thousands of people like him. Small depositors, pension holders, working families. He knew that draining $242 million from a mid-tier regional bank would destroy it. He knew what would happen to them. He authorized the transfers anyway, 21 times, for $10 million. That's roughly $4,500 per depositor he helped ruin. If you divide his personal take across the human cost, that's the price he put on each of their financial lives. The other accomplices emerged in the investigation. Christian Anajemba, a Nigerian businessman who facilitated transfers and managed logistics. Others who played government officials in phone calls and meetings. This was a syndicate, a financial ensemble cast. But Sakaguchi was the load-bearing wall. Without a man inside the bank, Nwude was just a voice on a phone. With Sakaguchi, he had a pipeline. Sakaguchi was eventually tried in Brazil, convicted, but the asymmetry lingered. Nwude stole from a system he was outside of. Sakaguchi burned his own house down with people inside it. Nwude had the money, Sakaguchi had his cut, and a bank with thousands of depositors was dead. Now the Nigerian justice system had Emmanuel Nwude in custody, his assets catalogued, his accomplices identified. Everything needed to make this right existed in one courtroom. What happened in that courtroom is where this story stops being about a scam and starts being about something worse. Nigeria's Economic and Financial Crimes Commission, the EFCC, prosecuted Emmanuel Nwude. The EFCC had been established partly in response to Nigeria's international reputation for financial fraud. Foreign governments were pressuring Nigeria to prove it took these crimes seriously. Nwude was the perfect showcase. The biggest advance fee fraud in history, international headlines, a Brazilian bank destroyed, $250 million stolen. If the EFCC could deliver a conviction here, it would mean something. In 2005, they delivered it. Emmanuel Nwude was convicted, sentenced to 25 years in prison. The court ordered him to forfeit assets worth approximately $110 million, properties, bank accounts, holdings accumulated during and after the fraud. Justice, on paper. But do the math. 242 million stolen, 110 million forfeited. That leaves $132 million unaccounted for. Where is it? The court didn't say. The judgment didn't address it. $132 million, more than the GDP of some small nations, just vanished into the space between the crime and the sentence. The accomplices offered little relief. Christian Onajemba reportedly agreed to return funds as part of his legal proceedings. Then he died, before the process was complete. Died before the process was complete. Sakaguchi's parallel conviction in Brazil produced a sentence but not a refund. The legal systems of two countries had processed this crime through their machinery. Convictions were entered, sentences were handed down, files were closed. And the depositors of Banco Noroeste, the retirees, the families, the small business owners, received nothing. The system had processed Emmanuel Nwude. The question was whether processing and punishing were the same thing. From the outside, a 25-year sentence and $110 million forfeiture looked like justice. Then Emmanuel Nwude did something nobody, not the prosecutors, not the EFCC, not the Brazilian depositors who lost everything, saw coming. He called his lawyers, not to appeal his conviction, to sue the government for his money back. After his conviction, Emmanuel Nwude mounted legal challenges against the seizure of his assets. Read that sentence again. A man convicted of stealing $242 million went to court, the same court system that convicted him, and argued that specific asset forfeitures were improperly executed, that the seizures exceeded the scope of the judgment, that the government had overstepped. And he won. Nwude successfully recovered a significant portion of his seized assets through the Nigerian legal system. The convicted architect of the largest advance fee fraud in history used the courts to claw back his money from the government that prosecuted him. The system didn't just fail to hold him, it actively returned what it had taken. But the lawsuit was only the beginning. Reports indicate that post-conviction, Nwude maintained a personal security force of approximately 200 armed men. 200. That's not a bodyguard detail, that's a militia. That's a private army funded by the proceeds of a crime the state had supposedly punished. A man serving a 25-year sentence doesn't typically maintain 200 armed guards. But Nwude wasn't a typical convict. He was a man who understood that power, in certain systems, is not revoked, it is renegotiated. His 25-year sentence was reportedly reduced, quietly, without headlines. The showcase prosecution, the one that was supposed to prove Nigeria took financial crime seriously, became a revolving door. The conviction that was supposed to mean something became a timestamp. He went in, he came out. The system moved on, and Christian Onajemba, the accomplice who agreed to return funds, was dead. His death meant millions in potentially recoverable assets became entangled in estate disputes, legal limbo. The money that might have gone back to victims dissolved into paperwork. Whether his death was convenient or coincidental is a question this story raises. It does not answer it. Now step back. Look at the full picture. Emmanuel Nwude stole $242 million. He was convicted and ordered to forfeit $110 million, less than half. He then sued the government and recovered a significant portion of that forfeiture. His sentence was reduced. He maintained a compound with 200 armed men. His accomplice, who owed restitution, died before paying it. Compare this to what happens when a street-level criminal in Nigeria, or Brazil, or the United States, or anywhere, steals $1,000. Compare the sentence, compare the enforcement, compare the recovery rate. The asymmetry is not an accident. It is the architecture. The system didn't cage Emmanuel Nwude. It sent him an invoice. It calculated the cost of having committed this crime, a percentage of the stolen amount, a portion of his time, and it collected what it could. Then it closed the file. The conviction wasn't punishment. It was a transaction cost, a licensing fee for a $242 million theft. The price of doing business, calculated after the fact, negotiated down through the courts, and partially refunded on appeal. This isn't a story about Nigeria's justice system being broken. That framing is too easy and too small. This is how financial crime is processed globally. The system isn't malfunctioning. It is functioning exactly as designed. It processes financial criminals the way an accounting department processes invoices. Categorize, calculate, collect what you can, close the file, move on. Emmanuel Nwude recovered his assets. He kept his compound. His militia stayed armed. The system had processed him and moved on. But $242 million doesn't come from nowhere, and it doesn't go nowhere. If Nwude kept his, someone else lost theirs. Go back to Sao Paulo. Go back to the branch that doesn't exist anymore. Go back to the retiree who kept his savings at Banco Noroeste for 19 years. He didn't sign a contract with Nigeria. He didn't negotiate with Emmanuel Nwude. He didn't take a kickback from anyone. He deposited his pension. He trusted a bank. And a senior director of that bank sold him out for 4 cents on the dollar. There were thousands like him, small business owners who kept their operating accounts at Banco Noroeste, families saving for homes, workers whose direct deposits landed in an institution that was being hollowed out one wire transfer at a time. They are the only characters in this story who did nothing wrong, and they are the only ones who paid full price. The math is simple. Emmanuel Nwude stole $242 million. He forfeited a portion. He sued and recovered much of what was forfeited. He lives in a compound guarded by 200 armed men. Nelson Sakaguchi took $10 million for his cooperation. He was convicted, but the depositor's money didn't come back through his sentencing either. Christian Onajemba died before returning his share. The money evaporated into probate. The depositors recovered nothing. Two realities exist side by side. In one, a convicted fraudster maintains a private army and successfully sues the government to recover his seized assets. In the other, ordinary people who trusted a bank lost their savings and received no restitution. These realities are not in tension. They are the same system, seen from two different elevations. Nwude looked at the system from above and saw a machine that could be negotiated with. The depositors looked at it from below and saw a wall. Return to Abuja, the empty plot of land, scrub grass, red dirt, silence. There was never going to be an airport. There was never a blueprint. There was never a foundation poured or a runway graded. The construction timelines were fiction. The progress reports were theater. The entire project existed only as a series of documents designed to move money from one account to another. But something was built, not a terminal, not a runway, a machine. A perfect, efficient machine for converting other people's savings into one man's power, with the justice system as the processing fee. If this story made you think differently about how financial crime actually works, share it, not for the algorithm, because this is a story most people have never heard, and probably should. There is still no airport in Abuja's capital district. There was never going to be. But $242 million changed hands. A bank died. Thousands of depositors lost their savings. A man was convicted, invoiced, and released back into his life. And somewhere in Sao Paulo, there are people who put their paychecks into Banco Noroeste and never got them back. They are the only ones in this story who paid full price for something that was exactly what it appeared to be.